That's right. We got a nice little earnings report for you. Micron reported earnings after hours today, so you see, as a result, up 5.5% after hours. Nice little positive movement there. So we'll take a look at these earnings and see what exactly is going on with the stock and why it's up. Well, you see little pop-up ads. You say, "Get out of here, buddy." Okay. So Micron posts a non-GAAP EPS of 82 cents, beat by 6 cents, and a GAAP EPS of 71 cents, beat by 7 cents. So overall, a beat on the GAAP and non-GAAP perspective. Very nice EPS numbers, way better than expectations. Very nice. And a revenue of $5.44 billion, which is a growth of 13.6% year over year, beat by $130 million. Got to like that. And gross margin of 32.4 versus a 32.8 consensus, and guidance of 33 to 34%. That's interesting. I don't know why they threw that one in this one, but regardless, good revenue, good EPS number there. You like to see it for a company that the sentiment was pretty far down on these chip distributors. The sentiment was pretty negative for the last little bit, just due to supply chain concerns. So it's good to see a positive beat there. So DRAM revenue was up 16% quarter over quarter and 6% year over year, with bit shipments up 10% quarter over quarter. Average selling price, we're up in the mid-single digit percentage range on the quarter. NAND revenue was up 10% and over 50% on the year. Bit shipments were up in the low single digit, and average selling price in the upper single digits growth-wise. Gotta like that. See growth on both aspects of their business is good to see. Operating cash flow of $2.02 billion compared to $2.71 billion in last year's quarter. Honestly, not that bad. Operating cash flow is looking pretty good there for everything going on right now in the middle of pandemic. This is their hardest hit pandemic quarter, and to see a good number like that, not bad. Free cash flow of $101 million. Micron ended the quarter with 2.6 net cash, 2.6 billion, I should say. And as far as guidance is concerned, they're expecting 5.75 to 6.25 billion versus a consensus of 5.51 billion in terms of revenue. That's a pretty big difference there. So that's very nice, and that's probably a beat on all aspects. You see a beat in EPS, revenue, and guidance. The stock's typically going to go up, and here it is. And gross margin of 34 to 37%. 625 to 675 in operating expenses, and an EPS of 95 cents to $1.15 versus a consensus of 80 cents. That's a massive difference there. A massive guidance beat, I should say, for both revenue and overall EPS. So you gotta love that. You do have to love that. So if we look at the more detailed report here, Micron's exceptional execution right from the CEO here. In the fiscal third quarter, drove strong sequential revenue and EPS growth despite challenges in the macro environment, no doubt about it. We are ramping the industry's most advanced DRAM technology into production and have delivered more than 75% of our NAND volume as high value solutions, supported by record solid-state drive revenue in the quarter. Our portfolio momentum positions us exceedingly well to leverage the long-term growth across our end markets. Gotta love that. Good positive news from, obviously, from the CEO. And again, they'll always give the positive side, but still, there's good numbers coming from this business, and I don't think there's any denying really what they're doing. Even this business outlook is looking pretty darn good. Nothing really significant to mention besides the numbers we've already seen. Operating income, it's a good number. It's a good number. I gotta give them a good credit in this net income number, looking pretty nice as well. Versus the 36 cents last quarter, they posted 71 cents in EPS this quarter. Good to see it. Good to see it. That's for sure. So next, I would probably turn it to Well, we all know we want to look at this balance sheet, right? So they give a couple numbers here. They give a 3 months and a 6 months ending here. So I'll be probably comparing it to the August 2019 because I like a 6 months comparison typically. That's a 9 months comparison. Let's go. So let's look at the 9 months because I prefer a year-over-year comparison. So let's look at 9 months and see what happens. So as of this quarter, $8.2 billion in cash and cash equivalents versus 7.1 9 months ago. And again, one thing you need to notice, you're seeing with a lot of companies right now, they've really risen that cash position as well as just their normal total current assets position to deal with pandemic environment. But they're also raising their long-term debt quite a bit as a result. So I'm interested to see if this carries over with this company who's been pretty well positioned and having some good quarters. So total current assets of 17.8 billion or 17.9 really to be fair, versus 16.5 9 months ago. Good growth there. Total assets of 52 billion versus 48.9 billion 9 months ago. Good growth there. Now the question again, here we go with liabilities. We want to see it. Total current liabilities of 6.1 billion versus 6.3 billion 9 months ago. So overall, current liabilities not really taking a hit, but it's the total liabilities as far as long-term debt that we've really been seeing. And I guess you do see it here. Long-term debt has definitely grown in the past 9 months. Right now, total liabilities of 14 billion versus 12 billion. That's a growth of $2 billion, but they managed to grow their total assets by $3 billion. So all things considered, that's not bad. And I think you can obviously tell this is a beautiful looking balance sheet. Just beautiful. Total equity for shareholders of $37.8 billion. That is incredible. It's a really good balance sheet when you have 4 times the amount of assets that you do in terms of liabilities. Really good balance sheet. So nothing I can complain about here for sure. Micron at these levels I still think is a fair investment. I really do. I prefer anything under 50 is beautiful for this company in my opinion. And obviously they've had a choppy year so far, still down on the year, but it's a very choppy stock. It's a very cyclical stock, and you can see that in the past 3 years it's been very, very choppy. But I think anything under 50 is still a good buy for this. Obviously now it's up above 50, but what can you say? Did hope you enjoyed this though, and have a good one.